Welcome back, everyone. This is the sixth and final video of our Back to the Basics of Multifamily Investing series. Please keep in mind this is for educational purposes only, and feel free to refer back to our disclaimer from our first video or see below. In this video, we're going to go over a case study on a property that we invested in. So let's get started. For privacy reasons, we're not going to actually put the name of the apartment complex here. We're just going to call this our apartments. We invested in this property in 2018. It is a 25-unit property built in 1960. At the time, it was a C- property in a B-class neighborhood in Texas. In 2018, it was purchased at $1,160,000, which comes out to $46,400 per unit. And at that time, there was not much renovations done on the property when it was purchased. But the property wasn't badly distressed, but there was a clear path for value add from the get-go on this property. So remember, when considering investing in a property, there are a few important terms or numbers to know. First is the cap rate, then the NOI, and lastly, the cash-on-cash return. NOI is the net operating income, which is the revenue minus the expenses of the operation. This doesn't include debt service or the mortgage. The cap rate is a number used to compare the properties of the same class in the same neighborhood. It is calculated by NOI divided by the purchase price. So a low cap rate means a higher price for the net operating income, or more expensive if you're comparing properties in the same neighborhood and class. For our apartments, the NOI is $92,650, and the purchase price was $1,160,000. Using these numbers, the cap rate comes out to 7.9%, or approximately 8%, which is a relatively high cap rate. Cash-on-cash return, or COC, is calculated by the cash flow divided by the cost of acquisition of the property. This is a measure of the return on investment. Our property has a cash flow of $39,000 when it was initially purchased, and an acquisition cost of $600,000, which was for the loan down payment, the closing costs, and the renovations. This amounts to a yearly cash-on-cash return of 6.5%. The property was projected to perform with a 33% return of investment at the sale. That's without accounting for any yearly cash flow. The project is currently in its third year, and rents have improved from its initial rents of $550 per unit to $695 per unit. This increases the NOI by $43,500. The current market cap rate in the area is 6.5%, which equates to an equity creation of $670,000. As of the recording of this video, which is March 2021, our apartment is currently under contract and pending sale. We hope you now have a better understanding of multifamily syndication. If you're interested in partnering with us, our mission is to maximize value for both the communities we invest in and for our investors. We believe in full transparency. We're happy to answer any questions our investors may have at any point before, during, and after investment. Our company is backed by a strong track record of investment performance, and our partners have 10+ years of experience in the industry. Our goal is to provide investments with a preferred cash flow of 6 to 9% to our investors. Over the life cycle of the property, we strive for a 15 to 25% total annual ROI of initial investment capital. Keep in mind that SEC laws and regulations are very strict. Our offerings are for both sophisticated and accredited investors. While we welcome both investors, any investor interested in participating in a deal must fill out an investor form with us. That is a prerequisite to invest with us and any kind of syndication, actually. Once the offering is available, investors who are investing will be provided with all the legal documents that they need to make an informed decision on the offering. With that, I thank you all for listening and for your interest in our company. We hope this video series was helpful. This is our contact info, and it's also in the description below. Contact us if you have any question at all, or if you're interested in any opportunities that we're currently working on. We look forward to partnering with you, and thanks again for watching our series.